Good morning from our global headquarters here in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The fog of data distorted by storms and strikes, the last payrolls report before the Fed decides. The big week for tech draws to a close. Intel and Amazon turn the tide as Apple disappoints. And oil jumps on a report that Iran could attack Israel via proxies in the coming days. Good morning, Manus. Happy Friday.
Danny, good morning. Happy Jobs Day. 136,000 is the whisper number on the Bloomberg terminal. Stocks, I mean, we're clawing our way back this morning, but we tanked yesterday by nearly 2% on the SPOOs and 2.7% on the NASDAQ. It is Intel and Amazon that have managed to give us that little bit of a bid as we go to the close of the week, but still stocks and bonds have losses for the month of October. Roll it over, have a look at the bonds. Again, we were spooked a little bit by the PCE yesterday. This morning, we see a fairly flat number into this jobs report. Over the course since the last Fed decision, we're up 50 basis points, the biggest losses in 2 years in this month. We are nervous, Danny. We're pivoting from FOMO to fear and back across these markets. Snapshot of the gilt market because it is lit up and on fire. The twos are up for 10 days in a row, the longest stretch since 2006. This is a market that is spooked by the Labour budget, but nowhere near as they were under a Liz Truss budget. I mean, the 10s are up 18 basis points. Liz Truss, 100 basis points in a couple of days.
All of that, though, came together for a really bad month for global bonds, for global just treasuries, gilts, all of them. The worst month for the Bloomberg Global Ag Index since September 2022. Man, since September 2022, if you can remember back then.
I can barely remember Monday, but go back to September 2022.
Inflation was rampant, and the Fed was hiking by 75 basis points every single meeting. That's the kind of month we just had for bonds.
And now we're down to scrabbling over whether we're going to get a pause in November, whether you'll get another 50 basis points. By the way, the market is trimmed back. It's now 20 basis points in November rather than 24, which was last week. That just shows you the kind of margin of error we're dealing with.
Yeah, and everyone assumes that this jobs report's going to be really weak because of all the strangeness in it, making up words here on a Friday. What happens if it's really strong, though? What happens even with strikes, even with the hurricane? It's a strong figure. Is the market prepared for that?
I think that's the actual tail risk here, isn't it? We have got stocks as well. I mean, I said that Intel and Amazon sort of saved the week, as it were, and it has been a big week for some of the Mag 7. As we close out, Apple drops, Intel and Amazon are bid, strong margins coming through there. Now, Bloomberg caught up with the Intel CEO, Pat Gelsinger, and he says it was a challenging quarter.
We worked very hard this quarter to get this done. And the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way. But to also deliver better than expected results if we eliminate those one-time charges and to take our guidance up for Q4, I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges maybe in the history of Intel.
Well, the stock is surging pre-market, as you can see, up over 5%. Optimism about a turnaround there that the CEO himself calls perhaps the most audacious. Joining us now is our tech reporter, Nuli Prunell. Nuli, good to see you. The question is, he calls it an audacious turnaround plan. They've kitchen sinked in terms of write-downs, so they've cleared the decks really for him to do as he needs to do to right the ship at Intel.
Right, and I think what jumps out, I mean, he just referenced that in those comments, is they put out a pretty good revenue forecast. So they said they're expecting $13.3 to $14 billion in the next quarter. That's above what analysts estimate. And yeah, you're right, the wider context, he calls this an audacious turnaround attempt. They're trying to preserve cash. They are cutting more than 16,000 jobs. The goal, of course, to try to get market share from NVIDIA. Which is, of course, making these high-end AI accelerators that everybody wants. So that's the wider context, but I think, probably the street reacting to that good revenue forecast.
It just underscores that tech is certainly not a monolith this quarter. Apple's a great example of this. Even though it was largely a solid quarter, it was their outlook, their tepid holiday outlook, that maybe sent shares lower pre-market this morning by more than 1%. Newly, I was under the impression that channel checks had showed us that demand was strong in China, but it sounds like they had some challenges.
Right. I mean, revenue beat expectations that's good. But right, they forecast low to mid-single digit growth versus 7% that analysts expected for this upcoming holiday period, right? And in China, there was a decline in China revenue year on year. It's an important market, of course, for them. Not only do they make a lot of their devices there, but they sell a lot. It's their third biggest market after the Americas and Europe. They're under some pressure there from local rivals, some other issues. Unclear how, for example, intelligence is going to work in the mainland. And so, but yeah, I think some issues there in that market that they'll have to deal with.
I'm looking at Amazon, a fairly bullish guidance from them in terms of the outlook, but the holy grail within Amazon is, of course, AWS. That is the alpha. What do they tell us about that side of the business?
Right. Well, you might have seen in previous days, we saw really strong numbers in cloud growth from competitors like Google and Microsoft seeing 30% plus growth. Amazon said the cloud business grew 19%, and operating profit was up. And the three kind of important pillars to Amazon, their e-commerce business, advertising, and cloud, all seem pretty good. Larger context again, CEO Andy Jassy is trying to sort of batten down the hatches, really run a tighter ship. And again, they're investing in data centers and preparing for this new wave. But yeah, the cloud number strong. It had been slowing, growth had been slowing. So it looks like maybe they're regaining momentum on that cloud front.
Newly, thanks for joining us this morning. That is Newly Purnell. Joining us now is Karim Moussalem, Equity CIO at Selwood Asset Management. Karim, really wonderful to see you again. It is an equity market that's trading off some of these earnings. And you point out that volatility is extremely low for equities. Spreads are really tight. All of that despite the fact we have a lot of event risk in just the next week. Is this a too complacent equity market, Karim?
Yeah, great to see you. Absolutely. I think it's incredible to see so much complacency across markets, not just equities, but as you said, fixed income as well. My pars on the credit side were highlighting how tight spreads were in high yield, certainly relative to IG spreads. And on the equity side, we've seen almost record low volatility at the index level, not so much when we look at single stocks. And I think overall market participants have front-loaded a Trump win with U.S. equities very strong relative to the rest of the world. You've seen crypto bid very aggressively. Bond yields have come down quite substantially, and we're kind of replaying the playbook of 2016 in a way.
I mean, this is the debate as to whether stocks and bonds have really moved on the back of a Trump win red sweep or the soft landing, no landing theory that we have. So here's the thing. Next week we go into this election. If it is a Harris victory, do you think the bond market or the equity market responds more aggressively if your thesis is that that's what's primed the market?
No, and that's actually a great point, because I think in both scenarios, you're looking at two camps that are looking to spend more. The only difference is that Trump is promising a number of actions with the help of Elon Musk at cutting spending, which I think is what every government, whether it's in the UK or France, for example, should do much more of. Instead, you're seeing more and more spending, which is pushing up long-term yields, which I think is going to be a problem for the market at some point, especially in the context of an accelerating de-dollarization. So you have to ask the question, who's going to buy all this debt and at what yield? You look at the U.S. earnings yield on the S&P is now below the 10-year yield, which historically has been a huge red flag for stocks. So again, I think there's a lot of complacency, and I think in both scenarios of a Trump or Kamala Harris win, I see a lot of risks for the equity markets going forward.
Well, Karim, where you are in the UK, in London, is a great example of what can happen when the bond vigilantes are let loose over a budget. UK yields surging yesterday at 1.18 basis points for the 10-year. But are you saying that even with the U.S., even with the currency of reserve, that the same thing can happen there if there are budget and deficit fears?
Yeah, no, totally. I think it's a problem in the West. If you look over the last decade, we've had to add more and more debt to generate one unit of growth. And I think, it's becoming challenging across all these Western nations where, all this spending is adding to the debt load. And in a way, I think the only way to get out of this hole is to inflate ourselves out of this mess. which is why, again, I think hard assets, we spoke last time in Wembley about commodities. I think commodities is going to have to be a great place to hide, over the next 5 to 10 years. But real assets in general is where you want to probably park your money.
Which then takes us to part of the spectrum within the commodity family, which is gold. I've got Mohammed El-Arian op-editing about an alt to the dollar. I've got Sergio Motti in Washington really warning about a shift into gold being more than just something which is speculative. How seriously is gold an alt to the dollar? How much of that thesis will grow?
Look, I think gold is telling us two things. Number one is that, again, there's an acceleration of the de-dollarization trend, and I think a lot of the buying of has been done by central banks. I think freezing Russian central banks' assets in particular has led to increased gold buying, but I think it's also potentially telling you that there's a risk of these budget deficits growing out of control, more issuance, and a debasement of currencies. And gold, in a way, protects you from that. And I think if you look across investors' portfolio, I'm pretty sure that if you were to take a snapshot across investors globally, there would be a massive overweight of stocks, and U.S. stocks in particular, and you wouldn't find many people owning either gold or commodities. So I think you have a long way to go when it comes to these hard assets, and gold in particular.
Okay, well, let's see where it flies to. Let's see what next week brings us. Karim, thank you so much for joining us this Friday morning. Karim Moussalem of Selwood Asset Management. There are other stories trending on your Bloomberg terminal this morning. This is what we've got for you. Nomura's profit beat analyst estimates, which was driven by strong results in the wealth management and the trading and investment banking. This comes despite recent scandals and reputational damage that brings into question whether the growth can continue.
Goldman Sachs says higher U.S. tariffs on Chinese goods could dent growth, but also force a long-awaited shift to the consumer. It assumes a 20% tariff if Trump wins and would spur officials to prioritize greater consumption to drive economic growth.
Bitcoin's push towards a record high is fizzling. This as Republican nominee Donald Trump's election odds drop in the betting markets. The cryptocurrency has been dubbed a Trump trade because the former president's tight embrace of the industry. And its price has risen when his odds of winning were higher.
Coming up, oil marches higher on a report that Iran is planning an attack on Israel via proxies. We're going to have more on that next.
And we'll push ahead to the last job sprint before the Fed decides with Jose Torres of Interactive Brokers right here on Bloomberg Brief. Context matters every day. Bloomberg Brief on Jobs Friday with Menace Cranny and Danny Berger here in New York. Oil prices, let's check them out. They're jumping after we had an Axios report that Iran may be planning an attack on Israel from Iraqi territories. Joining us now with the very latest is our senior editor for energy and commodities. It is Will Kennedy. Will, it's hard to believe that we're just 5 days back from a drop of over 6% as the Iran response, or the Israeli response on Iran, was not as we feared. Here we are, again talking about war premium, but it will depend on the response mechanism.
It is. I think the fact that we're up again speaks to the fears continuing that we could end up in an escalatory ladder where a response from Iran, which Axios has written about yesterday, as you say, is then countered by Israel, and we keep going up that ladder of escalation. I think on Monday, when the Israeli response was didn't target the nuclear facilities, didn't target the oil facilities, that traders were happy to trade on the fact that perhaps the risks were contained for the time being. But of course, it remains, as we've seen today, a volatile situation, and a situation where traders may want to buy protection against more escalation.
Well, it's the constant push and pull of this oil market. Do you trade on the geopolitics or supply? Man has pointed out to me this morning a report that U.S. oil production has hit another record, which on one hand has interesting political implications at this moment when Trump is talking about drill, baby, drill. How does that complicate things for OPEC at this moment, Will?
Well, OPEC will have to decide whether it wants to go ahead with its increase in the early part of next year. We expect that there might be some talks about that in the coming days. It's not clear what they will decide to do. As we've discussed before, Danny, the supply-demand balance for next year does look fairly loose. There are a lot of people out there who think that the market, as things stand, may risk being oversupplied, partly because of the strong US production, as you say, but production from other places, South America, for example, and OPEC's plan to start putting some production back in the market. So OPEC will have to calibrate where it stands and think about whether it wants to proceed with those plans. We should get some clarity on that in the coming days, but I think the fundamental truth is that there are risks of oversupply next year, and many traders are slightly bearish about the outlook.
Well, it's always great to get you on. That is Bloomberg's Will Kennedy. Thank you so much. Coming up, Boeing reaches a tentative deal with its union leaders to end the lengthy dispute. We're going to have the details for you next on your Bloomberg Brief. The shares higher, 2.4%.
Bloomberg Brief. I'm Manish Krani alongside Danny Berger in New York. Time for your front pages. This is what we've got for you. Let's kick it off with the Washington Post. It starts with Vice President Harris showing a big early voting lead. Now, Harris leads Trump between 19 and 29 points nationally by those who have voted. This comes despite the Republicans embracing the early vote in this election.
Next up, the Wall Street Journal has this on the front pages. Comcast is considering a spin-off of its cable networks. The company lost about 365,000 cable TV customers in the third quarter. Its success this quarter, though, was driven by the Summer Olympics and its film and TV studios. Cable networks there include MSNBC, CNBC, E!, Bravo, among others.
And Bloomberg leads with the Boeing story. The union leaders have reached a tentative agreement again to end the strike. It goes to a vote on Monday. The union is urging its members to accept the offer. Let's get a little bit more on the story with Sid Phillip. He's tracking. This is the third time, rejected by over 60% the last time. Tell me the details. What have they done to close this gap in the offer? Sid, good morning.
Morning, Manus. So essentially what Boeing's offered and what the unions told the workers to accept is a 38% hike as well as a 12,000 ratification bonus. And that would sort of get them quite close to the 40% that they were asking for. At the same time, the defined benefits pension that they had previously sought, that was not on the table.
Sid, there had been thoughts that this would happen sooner, just because the significant amount of cash burn that's happening at Boeing. Should this come to an end soon, how will we look back on this period? How damaging has it been for Boeing?
It's been extremely damaging for Boeing because Boeing has been unable to produce aircraft, especially the 737 MAX, which is its workhorse. And essentially, every time it delivers an aircraft, it gets cash in the door. And so for Boeing to actually start delivering, getting cash and delivering aircraft, they need the strike resolved. They're now in the 7th week. And essentially, the company is counting on the fact that the union and the union workers who are sort of getting into the holiday season will be sort of poised to accept this deal and actually come back onto work and get production back again.
Sid, who's got the negotiating hand here? Danny and I were chatting about this morning. Kelly O'Rourke's actually been able to do a lot. Get rid of 17,000 people, raise over $20 billion. You know, under the cloak of angst in the company, been able to execute an awful lot.
He has, and he's sort of had a very busy couple of months since he started at Boeing. And essentially, I think that sort of exemplifies the challenges that exist at Boeing, because Boeing has got multiple fires on multiple fronts, and they've had to sort of work on getting production stabilized. They had the FAA regulating production because of the blowout back in January. And so Boeing has had many problems that they've had to deal with, and the strike is one of the biggest and most crucial ones. But they've had multiple issues, and so Ortberg's had to get his hands in there and actually sort of work on all the restructuring that he's had to do. And I think it's still early days, and there's still more to be done in order for Boeing to be able to sort of actually start generating cash.
I think a lot of people will be happy not to have to talk about these strikes and negotiations anymore. Sid, thank you very much. Bloomberg's Sid Phillips. So Manus,
Danny.
favorite thing of Halloween yesterday. Need to show everyone a very important tweet from Treasury Secretary Janet Yellen. It's my favorite thing ever. I just want to put it up and read to you the caption. She writes, "A frank and productive exchange of views with my counterpart on key issues like expanding the global supply of candy and toys and tightening sanctions against chores." It is a mini Janet Yellen, and I, for one, am obsessed.
You know what? I think it's great when people actually show a little bit of humor. You've got to say, as head of the Fed, maybe she was a little bit more constrained. Treasury Secretary, she seems to have found her mojo.
I think people really underrate Janet Yellen's comedy chops. But you know why I love this? The young girls out there should be dressing as economists. I want to know, though, how many of her friends looked at her and were like, "What are you?
What are
you wearing a white wig? Are you just a random older woman?" I'm not sure, but I love that.
I've got to say, the trick-or-treaters came round. They came to my door. There was no candy, although, as you just said, maybe you offered them a protein bar.
Yeah, something healthy.
Listen, I said to them, I'm saving you. I'm saving you from the candy. That's what I said to the kids.
How did that go down?
Go to floor 10. There's people on floor 10 who've got a little bit more candy in the bucket.
Manis, you need to have candy for Halloween. You got to give the kids something.
I'm culturally absorbing myself, year by year.
Yeah, give them a protein bar. I think
a protein bar.
Well. Okay. Aside from Halloween, that is done and over. It is the payrolls.
Jobs Day.
Spooky Jobs Day. I heard you did a spooky pun. You said fear in your market check. You also said spooky, I think. I see some Halloween themes creeping in there. Yeah. Okay, well, anyway, we're going to talk about it with Jose Torres, Interactive Brokers Senior Economist. That's coming up next. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manis Granny here. Let's set your agenda.
The fog of data distorted by storms and strikes. The last payrolls report before the Fed decides. The big tech week draws to a close. Intel and Amazon turn the tide as Apple disappoints, and oil jumps on a report that Iran could attack Israel via proxies in the coming days. Danny, good morning. Jobs Day.
Jobs Day. We're still dealing with the aftermath of tech days. The Nasdaq turns it around, but yesterday was the biggest decline for the S&P in nearly 2 months, driven by the disappointment in big tech. It is Amazon and Intel lifting us up this morning. When it comes to the bond market, it was the global bond ag's worst month since September 2022. Gilts at one point yesterday up 18 basis points off the back of the Labour government's budget. Meanwhile, Brent crude jumping this morning 2.7%, Manis, over fears of a retaliatory strike via proxies from Iran to Israel. Now, the big thing, as you mentioned, Manis, 3 hours to go until the October jobs report. Bloomberg's Mike McKee joins us now. Mike, what are we expecting? This is a difficult one to try to get a forecast for.
Yeah, I'm not sure you want to put a whole lot of money on the forecast because nobody really knows, but we are looking for 100,000 jobs, which is down from when we left here yesterday. The economists on Wall Street getting more pessimistic. We had 254,000 last month, which was quite a surprise. But as you mentioned, we have a lot of these weird things going on. Manufacturing payrolls, the forecast is for a 30,000 loss because of the Boeing strike. The unemployment rate expected to be unchanged because the strike doesn't and hurricanes don't fit into that. And average hourly earnings expected basically to be no change. But the thing is, to quote the old film producer William Goldman, nobody knows nothing. And it's the range is what's amazing: 10,000 to 180 negative to 180,000 positive. It's the Boeing strike and the impact of the hurricanes. We'll know on the Boeing strike with the manufacturing jobs numbers, but the BLS is going to have to tell us how many people were out because of the hurricanes. ADP thought we lost 19,000 jobs to the Boeing strike and 13,000 in Southeast states, which would be a little bit better news. And you look at Wall Street, and Wall Street's leaning positive. 136,000 is the whisper number.
Look, this could be a very political jobs number as well, going right into that election next week, depending on which kind of number you get. I looked at the employment cost index yesterday, coming in pretty well behaved, plus 0.8%. That's the weakest since 2021. So the inflation side of this story is fairly well quashed. The unemployment rate is expected to stay steady at 4.1%.
That is what could be really important, because if we get a bad number, the Fed's going to look through it. They're going to say Boeing hurricanes. They're not going to be too worried about it. But if the unemployment rate goes up, then you've got something that the Fed will be concerned about and that the Democrats will be concerned about, because the Republicans will jump all over that. So that's something to keep an eye on in both camps.
Yep, well, it's certainly going to come down to the wire. Mike, you will cover that on surveillance with the team a little bit later on. Mike McKee on the data. Our guest this morning is Jose Torres, Senior Economist at Interactive Brokers, joins us around the desk. Jose, thank you so much for joining us. As Mike was just laying out there now, the differential is stark. The risk is Bloomberg's gone for a negative 10,000. The risk is, in the whisper number, 136,000. What is it this market seems to be prepared much more for a stoic number than a bad number?
Sure. So I'm expecting 125,000. Like Mike was saying, the data has probably going to be murky and cloudy. You have the effects of the strikes. You also have the weather effects. In terms of manufacturing, remember, we also have ISM coming out at 10 a.m., probably going to be, again, in contraction. That is the expectation. Overall, job growth is once again going to be dominated by the non-cyclical sectors, education, healthcare, right? Wage growth, I'm expecting 0.4% month over month, 4.1% year over year. Unemployment rate expecting to remain steady. Yesterday, we got a PCE report, really strong, really driven by consumer spending, has been driven, in my view, by fiscal stimulus. Jobs and stocks.
So is there a number that we could get strong enough today that you get this kind of playbook that's happened in the past? Strong data, you get a Nikki leaks over the weekend, some well-placed articles in various outlets, and a pause from the Fed. Is there any scenario under which that's possible?
Well, yeah, I think if you get a unemployment rate that ticks down to 4% or maybe even 3.9, right, data is going to be murky and cloudy. I think that you could get a pause. In fact, in our IBKR brand new forecast trader tool, the expectations on the Fed's walk down the monetary policy stairs are actually much more hawkish than Fed funds futures, right? We actually saw some trades coming in, Manus, where folks were expecting actually a pause next week.
Yeah, I mean, they've trimmed back. Well, we were 24 basis points of cuts. We're down to 20 on that. When we look at the data, consumer data yesterday, there's a ferocity to this economy, which one camp would say is what's driving the bond markets. When you think about what's ahead for the Fed, the case for pause from the data point of view is building a little bit more firmly, isn't it?
Absolutely. And you look at financial conditions, very loose, credit spreads, very light. Expectations very high, expectations of issuance and borrowing under both candidates, both Vice President Harris and former President Trump, expected to be high. There's also some talk on the street, Manus, that the growth expectations is lifting up the long end of the curve.
Yeah.
Also, you know, there's talk that Elon Musk is going to come and really be a fiscal hawk. But, you know, former President Trump is by no means a fiscal or monetary hawk. He's more of an easy money guy. So I doubt that, you know, if Elon Musk takes an integral role in the administration, that he's going to be able to get a lot of that stuff done.
But so much of what you're talking about is still just this big unknown. Julian Emanuel of Evercore putting out a note moments ago saying we are at peak uncertainty. And you see that playing out in the market, this narrative swing we keep getting. Do you think we're heading to a point where some of that uncertainty is washed away and we can have a clear narrative for the rest of the year and we won't have this back and forth like you see present in the bond market?
I think so. I think once we know who the candidate's going to be and what the makeup of Congress is going to be as well, right? Yeah. In our, in our IBKR forecast trader, the Senate is handily going to be controlled by the Republicans with about 90% odds, but the House is really nearing a coin flip with the Democrats against the Republicans. So, in fact, in the last few days, we've seen the Democrats gain momentum. Former President Trump, his odds have been reduced. Vice President Harris's odds have increased, as well as the probability of the Democrats controlling the House of Representatives.
You're right. I mean, the tax agenda and the fiscal agenda is, the Senate is perhaps going to flip to Republicans, and that is where the market worries a little bit more. When you look at the equity in the bond market, again, this is the debate that we've been having. U.S. stocks, and this is what Citi say, they're almost in a near euphoric sentiment. It's fully valued. Laurie Calvasina said it's hard to see where the extreme move to the upside comes. When you go into this election next week, and if Trump wins, what does that do to this equity market? Because a lot of the baskets are trembling at the moment.
So we've had a very concentrated rally, right? It's been really a lot of the Mag 7 driving the upside. So when you have former President Trump reclaim the Oval Office, he's talking about lowering corporate tax rates, deregulating. That's going to help a lot of the sectors that haven't participated much. Small caps, energy, defense contractors, financials, industrials, where I'm expecting those sectors to really have a catch-up trade into year end. Remember, November and December tends to be a very strong seasonal period. However, September and October tend to be pretty weak, but overall they weren't. September was quite strong. October was, mildly down because of yesterday's volatility.
All right. Thank you for saying that without using the phrase Santa rally. I appreciate that. It's way too soon to start talking about that. Jose, thank you so much for joining us this morning. Great to catch up with you in person. Jose Torres of Interactive Brokers. Okay, coming up, Boeing is rising in the pre-market trade. It's reached a tentative deal with its union, up 2%. We're going to have more on that story for you next on your Bloomberg Brief.
Have work to do, but we like hard work. Hard work is good work. Hard work is joyful work. And make no mistake, we will win.
We're doing well. I mean, now we're going to know in 4 days, but we're doing very well. I think we're leading by a lot. And if we can keep that cheating down, because they're a bunch of cheats. If we can keep that cheating down, we're going to have a tremendous victory. I think it'll go down as one of the greatest victories of all time.
Vice President Harris and former President Trump last night, with just 4 days until the election, both candidates are stressing to their base that victory is in their grasp. Joining us now is Bloomberg's David Gura. And David, Trump may be going one step further, saying we're way ahead where polls have been tightening. And again, sowing these doubts, talking about cheating.
Yeah, and that was to be expected. I mean, this is rhetoric he's used over the last two campaigns. But I was in Wisconsin earlier this week, where it's incredibly close. I spent some time with the incumbent Senator Tammy Baldwin there. And at every rally she gave, she started off by saying, this is the battleground state. I'm in a 50-50 race. The president's in a 50-50 race here. The presidency race is in a 50-50 characterization there as well. So everyone is acknowledging the closeness of it. But obviously him saying that raises the specter of what might happen after Election Day. And so I think everyone's kind of girding themselves for another prolonged period of fighting and wrangling in the courts on the heels of all of this.
Well, look, everybody wants to claim sort of victory in the early voting before it's even happened. Elon Musk saying we're going to have a crushing victory in Pennsylvania. Then you look at the Washington Post article this morning. Harris leads Trump by 19 and 29 points. Now, that's ahead of where Hillary Clinton was in 2016. But she's not doing better than Biden. So I suppose it depends on who is it that's turning up early to vote for Harris. If it's women, then it maybe shifts the narrative a little bit.
So first, it's just the turnout has been extraordinary. The number of people who've come out early to vote or sent in absentee ballots were over 60 million now before Election Day, which is a large number. And it's difficult to compare it to last time because of the pandemic and how that colored things back then. But you bring up women, and we heard that comment there from Vice President Harris. And she's kind of drawing on this remark that former President Trump made in Wisconsin a few days ago now, so it's a blur, on Wednesday, in which he says he's going to protect women whether they want me to or not, or like me to or not. And so that kind of evokes what we heard back in 2016 when he was running, and Chris Matthews, formerly of MSNBC, was interviewing him, and he said that he wanted to punish women who sought out abortion. So they're kind of raising the specter that he's not good for women, wouldn't be good for women. And the challenge here for Democrats is that group of white women is a huge part of the electorate. It's 30% of those who vote. And they've had trouble, as you allude to, sort of getting them to the polls. And I think that's really who they're honing in now on these last few days, is trying to get them off their couches, out of their homes to vote in Pennsylvania and other swing states.
It also seems like the Harris campaign is being really careful. And I kind of am alluding to essentially sidelining Biden. It's a strange moment where you're sidelining the current president and his ability to campaign after the whole garbage gaffe. But what does that just tell us about this final stretch and what the Harris campaign is trying to do and not do?
So it's unfortunate whether he misspoke or was mischaracterized when he made that comment about garbage. He's in Philadelphia today. He'll be talking about sort of his achievements with labor. But I think that the Harris campaign has to be sort of wishing or wanting him to sort of stay out of the limelight. And it's obviously, one would imagine, a difficult position for him to be in, when this all was crafted, just a couple of months ago when he decided not to seek re-election. There were a number of things that he said he wanted to achieve before he finished his term in office, whether that's Middle East peace or what. But I think that he is creating difficulty for the Harris campaign in a way that they obviously wouldn't want. And so, yes, he is not appearing with her on stage, and I think that that's probably the most marked contrast. Is you'd think that she would have him at some of these events. In fact, she hasn't. We've had former President Obama, but not him.
Well, she really did try. You remember she got off the plane. She tried to really draw clear blue water between her and the president in terms of what she was saying and what he had said. Operationally, I mean, it's mind-blowing for me to see this operation on the ground and the surrogates. As we go into this last leg, it's very much on the ground, operationally led in some of these states. The volunteers for the Democrats, 160,000 in some of these states, versus perhaps the advertising by the PACs. How does the ground assault work in these last couple of days?
One of the reasons I wanted to go to Wisconsin this week was just to see that in action. And so we started out at a rally that had a lot of labor union members in attendance, many of whom had come from out of state to campaign in Wisconsin. And what Tammy Baldwin emphasized, and these other candidates emphasized, is that's still what's really crucial here, knocking on doors, getting people to come out to the polls. And at the same time, as I drove around that state, it was so evident how that money is being spent. I mean, every billboard, all the advertisements during the World Series game had to do with this race. So people are being inundated by it as well. But we kept hearing over and over again that all politics is local. It's a thing, a trope to lean on. But the emphasis on the ground game is huge here, and less so on finding those kind of phantom undecided voters.
Right.
Finding those who might be registered as Democrats or Republicans, but might have something preventing them from getting to the polls, whether that's ennui or what.
By the way, at the bars watching the World Series, every time one of these politics ads, it's like a collective groan.
Yep, yeah. And here we are in New York, which is so different.
Look at what, whether it's legal or not, Musk throwing the $1 million prize ticket, and I think one of the numbers that was touted yesterday was with those registered voters that they've got, it could be anything up to 50,000. And if you look at Pennsylvania, that's a number that changes the dial.
What we heard in Wisconsin was this could be decided in precincts by just a handful of votes. So it does matter if you can convince one mind or two to go to the polls. And in a place like that, it could make a real difference.
You should do a cam when you're in that car driving around the various swing states. It's better than Panda Cam.
And this is why Manus is not your producer, David.
Yeah. Exactly. That's why no producer wants to go on the road with me anymore. David, thank you very much. David Gura there, tracking the politics of election 2024. And of course, we'll have full coverage. Boeing and the union leaders, well, they've reached a tentative agreement to end the labour dispute that's crippled the company's commercial aeroplane manufacturing. Let's get the details. Sid Phillip joins us now. Sid, it's about closing the gap between what was offered in the first two rounds and what's on the table now. So what has substantially changed since the second offer to this third offer?
Yeah, so at the moment, Boeing has offered them 38%. The previous offer was 35%. And they've also offered them a $12,000 signing bonus, essentially, if they agree to this deal. So that's quite close to where the union position was, which was a 40% pay rise. And the union also has implored the workers to accept this deal. They've rejected two deals before. They've asked them to accept this one, saying that they don't think they can push any harder, and they think that Boeing would basically give them a worse deal if they continue to strike. So that's the positions are being firmed up. The union saying you really need to get this vote across the line, and Boeing is desperate to get workers back in their sites and in their factories and actually start producing planes again.
Sid, even as these negotiations have dragged on, Boeing has still managed to raise $21 billion, a capital raise this week. Even though we don't have the agreement yet, does Boeing have a lot more breathing room because of that?
Boeing has a lot of breathing room because they have a huge backlog. I mean, the backlog on the 737 MAX runs all the way until the end of the decade. And so for Boeing, there is a backlog that so the investors are confident that Boeing will start delivering airplanes, and they have customers for those airplanes. At the same time, they actually need to start building those airplanes and actually start delivering those airplanes to get cash in the door. And for Boeing, the biggest struggle has basically been for them to actually get production back on track after the whole blowout that started this year in January, and the FAA scrutiny and all the other scrutiny that Boeing's already faced. And so they've had multiple fires on multiple fronts. They've had they had the credit rating agencies talking about potentially downgrading Boeing, and which is why they had to run to get that capital raise going. And so they've had a lot of fires, and Kelly Ortberg, the new CEO, has to put out all the various fires and try and get this behemoth, that's the U.S. manufacturing behemoth, actually back on track.
Okay, well, we're going to track a few more behemoths as well today. Sid, thank you very much. Sid Phillip there. Speaking of behemoths, we have Exxon and Chevron reporting their third quarter earnings. It's going to be before the bell for the key things to watch. We've got Vincent Piazza of Bloomberg Intelligence joining us now. Let's kick it off with Exxon. What are we expecting from them? We saw some pretty substantial buybacks from the Europeans yesterday. What are the Americans going to do?
Yeah, so for ExxonMobil, this will be the first quarter of the Pioneer Natural deal. It closed back in 2Q, so this will be the first quarter we get a look at Pioneer Natural fully integrated into the ExxonMobil asset base. Obviously, there were shares issued for that deal. So we're going to have weaker sequential results because of lower oil prices. You also have the dilutive effects of the shares being issued. But you're also going to have some pretty stout free cash flow, roughly $8 billion of free cash flow for investors. And that'll be for dividends and also for buybacks to reduce some of that dilutive effect from the share buybacks, but sequentially lower quarter over quarter. And you should see that also in Chevron as well. But there's a little bit of a twist there, and we can get into that whenever you wish.
How about right now, Vincent? What is the twist?
Sure. Yeah, sure. So for Chevron, similar sequential decline, not only for the upstream piece, but also for the downstream. You could see also output lower sequentially as well. The overhang here is obviously the Hess deal. They're in arbitration with ExxonMobil over Hess's key asset, which is Guyana. That is a hallmark asset for Hess, and the major reason why Chevron decided to acquire Hess. We won't hear anything until 2025, so maybe sometime around the first half of 2025, so a full year after Exxon has digested the Pioneer deal. So that's an overhang for investors. It's a key deal for Chevron. It gives it a great deal of not only short cycle output, but also that key growth area of Guyana.
Vincent, we appreciate it. Thanks for getting up early for us. Vincent Piazza of Bloomberg Intelligence. Later today, tune in to an interview that we will have with Chevron CEO Mike Wirth. That's on Bloomberg Open Interest, 9:30 a.m. New York time. Coming up first, though, we're going to get you set up for your trading day, upcoming jobs report, more economic data. What else could you want on a Friday? That's all to come on your brief. Let's get you set up for your trading day on this Friday. Exxon and Chevron will be reporting their earnings before the bell. Then it's the main event, jobs report, that comes out at 8:30 a.m. Eastern. Estimate is about 100,000. S&P PMIs, those come out at 9:45 a.m. And then ISM manufacturing at 10 Manis.
Yep, all eyes down for the jobs number, 130,000 on the whisper number on Bloomberg. Intel is bid this morning up 5.6%. The results sparking optimism about a turnaround, and they've eased the revenue concerns, really. Amazon is up 6% this morning. Again, good news around the cloud growth and cost cutting, and Apple just dips ever so slightly. It looks as if the services business is a miss. And also, I'd say, Danny, the guidance on China, just a little bit lighter than the market had anticipated.
Yep, tech certainly not a monolith this quarter. We're going to take you on a quick check on your bond market. Yields moving higher across the world. Jobs Day is coming up as the risk of hot jobs number, but the UK reminding us, Manis, that fiscal fears are real.
They are indeed. Nowhere near as aggressive as they were under Liz Truss, but the 10s are up by 18 basis points yesterday alone. Liz Truss did 100 basis points in 3 days.
Good context.
Yeah, matters.